reference points. Institutional reference. Can you see something on this VIX 75 1x, right? Sorry, I just want to say something. Can you see how price has been respecting this line of sensitivity? Now, the reason why I'm using it just like a backup or just like a guide, because price actually moved from zone to zone. You see, price when price was on an up downward direction, right? It came to this area, reacted, came down here, reacted. In as much the trend is downward trend, it pushed back to this area, reacted, and came down, reacted off this area. And now, from my view now, this guy is actually trying to push up this VIX 500 from this support level, or this support level is also a demand level. We have this sweep inducement. This type 2 now, because price did not break structure, gave us an inducement before the break of structure. So now, and this is meant to be like a market structure shift anyway, because we had the break, and we also have this break again. So, and what happened when price came here? From H4 time frame, it's actually an entry mode anyway, and price did well, took out the ARL. This was when price took out the ARL. And what do you see here? When price broke out this line of saying, price actually reacted off this line, right? Price broke out and came back here to retest. So the next zone we'll be anticipating for price to go next is going to be this one, based on my point of view. So we have breakout retest. It's actually a confluence with this breaker, right? So price is not, let me see, price actually. Let me use this line. Let me extend this line. So price break and retest. So this is more like a break and retest. And this line of sensitivity, I actually don't want to be using this tiny line anymore, because I see that price used to react often in that particular zone. So I'm taking this area as zone. So if we look at the past, price actually reacted of those areas very well. So sorry, I just want to check something briefly before we go to H2. Let me even add H2 to this guy. So I want us to talk about something today. It's going to be what we call, how many of us are on this course? Well, 5 people. Okay. So it's what we call the institution. So I want this session to be interactive. So I want this session to be interactive, institutional reference point. So let me even ask questions one after the other. So, Mr. Abraham, what's your point of view regarding these institutional reference points? Like, what do you know about these? What can you say about the institutional reference point? Let me see if you have an idea already. It's not here. Mr. Clement, are you with us?
Yes, I'm here.
Okay. What can you say about the institutional reference points?
To me, I think it's a kind of where the
You said?
has to take out the liquidity before moving price on their way. I said to me, my own understanding is where the big players always take liquidity from. Am I correct?
I'll give you, let me just give you 40 over 100. Okay. Okay. Madam Maniev Ntong. All right. What's your POV, point of view? Like, what do you understand about this um institutional reference points?
Good morning, all.
Yeah, good morning, ma.
Yes, I think it is that that point where the smart money place their trade.
Okay, good. Let me just give you 70.
Wow.
You know the reason why I'm giving you 70. You said market maker, right? Take their trade.
Yes.
Or should I give you 100 over 100? Mr. Folari. Good morning, sir. Pastor Folari, good morning, sir.
Good morning, my brother. Good morning. God bless you. God bless everyone. It's just the place where others are stacked that we refer to as the other block.
All right.
That's just what is.
IBN.
What is?
Can you give me an example of this institutional reference point?
Good morning.
Yeah, good morning, boss.
From my own view, I think
institutional reference point is like our own POI. Instead of calling it POI, then maybe another name we can use it for it is the IRP, like where institutional traders would like to place their own trade.
Okay.
Yeah.
All right.
That's my
In
own
fact,
point, what I think.
we are very, very correct. Right? We are very, very correct.
All right. Thanks.
So, I'm sorry, please, I want to check something brief. So, sorry, let me just show you something. Like price has already given us a change of character at this line of sensitivity or this support level. So we have this other block which has been mitigated. We have this other block which has been mitigated. I think this is the next other block, and I'm gonna be saying this as a blow, which might likely be taken out. So I'll just keep my eyes on this guy. So let's now talk about institutional reference points. And the reason why we're going to be talking about this institutional reference point is to give you confidence, right? Now, this is me want to like be confident about your setup, right? The outcome is either TP or SL, but just make sure what your checklists are intact. Now, this institutional reference point, we're going to be looking at what we call the order block, so that you can remove some junk from your brain, so that you can just have a light brain, a fresh brain whenever you're on charts, and you have this strong mind or this confidence whenever you want to take a trade. So the first I'm going to be looking at here is going to be what we call the order block, right? It's going to be what we call the order block. Then the second thing is going to be the breaker block. Breaker block. And the third thing here is what I'll just say the QML, which is the reclaimed order block. Can somebody tell me why it's called the reclaimed order block?
Let me try.
Okay, bro.
Because in that area, price have already taken liquidity from that area before.
Okay. And no problem.
Okay.
Let's just go straight to the point so that I'll be able to explain with illustration. Sorry. The breaker block and breaker block mitigation. So now, we are not saying anything new. We are not introducing anything new, right? It's something we already know. But how to actually take this trade and when and where to take this trade whenever we are on chart. This is the reason for this class. So institutional reference points are, in general, are where these market makers, the smart guys actually look out to take trade from. And we as retail trader, we don't just like to be trading like the retail trader, as we all know. We want to trade like this institutional guy so that we'll be able to manage and mitigate some certain risk in the market. So this order block, right? Now, normally, if price is in an upward trend, we see price giving us a low, break structure, come down, give us a low, break structure, come down, give us a low. Then impulsive move, we break structure, right? And it's something we already know that anytime price is breaking structure, price is taking the external range liquidity. We can also call this the ARL. Now, from this line chart illustration, we can see that we always have another block here, right? So this is another block. Now, from the previous teaching or what I've taught or what you've learned so far in your journey in the Forex space, now you might have been told or have said that most time is good price take liquidity. Yeah, let's say you have a liquidity sweep, right? Likely have a liquidity sweep before your order block, right? So now, most times, whenever you have an order block and this order block gives you liquidity before, let's say you have an inducement or let's say you have fair value gap before the order block. I'm coming, please. Let's say you have this fair value gap before the order block. Even though there's no liquidity sweep, as long as your order block is carrying a fair value gap, please take this. The order block is 100% valid. 100% valid, right? So because it doesn't have liquidity sweep doesn't mean that the order block is not valid, right? The order block is 100% valid. And if the order block has liquidity sweep, I'm just trying to say this so that we can erase some certain confusion, because most of us we want to see that order block that has liquidity sweep and has inducement, right? Let's say you have another block that has liquidity sweep and possibly you now have a fair value gap. You have a fair value gap without inducement. Please, this also is 100% valid. It's 100% valid. It's just that this liquidity sweep, it's just like it's make that zone very stronger, like give you that strong confidence. So once you have this and it has 100%, sorry, you can gently how will I put this so that we can, I'm just trying to say this so that we can have this confidence, right? So whenever you have another block that has this inducement, fair value gap, even though there's no liquidity sweep and it's a low, please, it's a valid order block 100%. If you have liquidity sweep and have fair value gap, even though there's no inducement, it's a plus, 100% good. And if price is able to give you an inducement and price now come there, it's just like a plus this point of interest. Sometimes you may not even have fair value gap, but with this inducement, it's also no problem. With this inducement, this order block is very, very much valid, right? This order block is very, very much valid. So in essence, don't get confused about explanations or illustrations or how people tend to give details to what a valid order block is, right? So the reason why I always emphasize an order block that has liquidity sweep is with this you already know that you already have an already made order block, right? Which means you are more secured whenever your POI has liquidity sweep. I hope we are getting this my explanation I just gave, right? So now
Yeah.
talking about this other block now, we have this other block, and whenever you have an order block, right? So normally we wait for confirmation. So whenever you have another block, you wait for price to come down to tap to your order block, right? So your entry confirmation now depend on you. You either want to use this change the state of delivery, either an engulfing pattern or a rejection like the doji. Fine. Now, when price tap to this other block, you wait for price to give you a confirmation entry, which is our usual pattern, have an inducement. Then you wait for price to come to this POI. So whenever you have this, you can confidently take your trade. Once I see this, I'm taking the trade without any delay. So now they now depend on the on price to now prove me wrong, right? But I know that my analysis is correct. My directional bias is fine. So this is going to be the inducement. Then we can now decide to take trade. But remember, this was when price tapped to your POI. And take note that you will look out for your confirmation entry. So now this is going to be like the confirmation entry. So now this is going to be like, it's going to be for the other block. You can decide to hold to the higher time frame, ERL, right? Or you target your 1:3. No, this meeting is going to end in 10 minutes. Shares. So now the second thing we're going to be looking at is the breaker block, right? Remember, price is tend to break structure to the
Please, coach, there is a message I sent on the chat aspect about what makes another block mitigated such that we cannot use it again. Maybe you not read it. Please kindly
yeah.
look at it.
Okay, no problem. I'll look at that. I'll even explain it here from the question you asked. Now, the breaker block is when price have this tendency, breaker a how like let's say this is another block, right? And normally we expected price to come here, then retrace back. But instead, price broke through. So this guy now becomes a breaker block, right? And we'll now have what we call the market structure shift at this point. Now, whenever you have this breaker block, before you take this entry, remember this is now a breaker block. So this breaker block, whenever you have this breaker block, for you to take trade, if it gives you an inducement, fine. If it doesn't give you an inducement, as long as you can spot liquidity or fair value gap, it's a valid POI. All you need to do is you wait for price to give you confirmation entry. And you confidently take your trade. If I see this, I'm going in. So this is how you spot a plus setup and you can confidently take your trade. So this I have here just like my confirmation entry, right? And remember, price is giving me inducement. Sometimes price may not give you inducement, right? And you have your fair value gap, you can still go in.
On this breaker block, can we also use
like candlestick formation instead of this normal confirmation entry.
Yes, but by default, this is the expectation you should be looking at. I think you'll be more safer with this. So all this candle confirmation, most time, right? Whenever it has given me this formation, my candle confirmation, because I don't like setting limits. I don't like setting limits. It's based on me, based on my experience. I don't know what you like to do, right? Like for example, this confirmation now, if price get to this point, that is when I'll now use candlestick confirmation on this as my additional confirmation to this setup. Sure, you get. This is where I love using my candlestick confirmation most time. And if you check, most of my entry are on 1 hour time frame. It means I've taken my directional bias from possibly the weekly, the daily, then H4 directional bias, or H8, then using 1 hour as my entry, right? But most times on synthetic, I use 15 minutes and 5 minutes for entry. But currency pair, I normally love using 1 hour, 45 minutes, or possibly 30 minutes. But basically, I always use 1 hour, right? So now, this is for the breaker block. Then mitigation block is when price has already changed direction. Now, this is just like what we call the breaker block. Now, henceforth, any setup you have in this area is going to be more of mitigation, right? So I'm not going to waste time on that because we just have less than 4 minutes. Then the QMR now,